Banks are slashing rates. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at this article from news.com.au, because two big banks here in Australia, or one big bank and one little bank, are slashing their home loan rates on the same day when, well, they're going to make it easier for everyone to get a home loan. Easier for everyone to get a home loan. Now, while I am an advocate for removing red tape, we've just seen from the complete farce that is no one in Victoria knows at all who hired security guards. And, I mean, I've worked for government. It's not, there has to be a paper trail. What is the point? Just follow the bloody paper trail. The minister of that department that signed off the purchase order, boom, they're responsible. There you go, right there. Done. Oh, what they don't know, keep going up. Keep going up. Just sack them all. That's fine. We need to save the money anyway. But you can see here, so I'm going off topic, like always. But now we've got cheaper home loan rates, so it's easier for people to get home loans. And now the rates are even going down. And this is, you know, with a cash rate that hasn't moved at 0%, but there's talk of, sorry, at 0.25%, but there's talk of even bringing it down further. So CBA and ING make home loans cheaper for customers. Two of Australia's biggest banks have slashed interest rates on a suite of home loan products in what's shaping up as the start of a lending war. This is written by Gerard Coburn for NCA Newswire. Commonwealth Bank and ING have slashed home loan rates, fueling a lending war where banks are desperate to attract new mortgage customers. The country's largest bank has shaved several of its loan products by up to 15 basis points, with its lowest advertised variable rate at 2.69%. 2.69%, everyone. That's just, what's CPI at the moment? I know, well, if we get the real CPI, if we get the real CBI, Consumer Price Index that takes property, it'll definitely be higher. But what are they saying it now? Oh, wait a minute. Yeah, oops, they're saying it's at negative 3.3% because everyone got free bloody, free, what do you call it? Childcare. But let's just take the last month. So 2.2, and then if you add 0.5, that's for the cost of housing. It's about at the adjusted CPI rate. And even that's questionable how accurate it is. But still. So the interest you're paying is pretty much CPI. And property prices are starting to overheat. They're starting to overheat. There's another video I wanted to do, and I'll probably do that for tomorrow, looking at Russell Island. Little islands here off the coast, down in Brisbane, south of Brisbane. And, you can get dirt cheap, tiny blocks, and people are moving there. We saw other ones where they built like a tiny home out there. Not really quite a tiny home, but almost. The problem is there's so many empty lands because the rates are so bloody high out there because you've got the ferry to service and all the other costs. So ING, the country's fifth largest bank in terms of household balances and mortgages, has also taken a knife to its suite of lending products, cutting its rate by 10 basis points. Its lowest advertised variable rate is 2.49%. The move comes a week after Westpac began advertising the lowest variable rate on offer out of the major four financial institutions, offering a 2-year variable rate at 2.19%. That then reverts to 2.69%. I mean, there you go, guys. This is just, they're doing everything they could. We had one viewer who contacted me. He was going from one bank to another, and then they wanted to take him back. And every step of the way, he was getting $2,000 cash, and he ended up pocketing the difference and getting a rate cut. Well, no, actually, this is what happened was he got an offer from another bank, and his bank said, "I'll give you this much to say." And then he went back to the other one, and they said, "Oh, we'll take that, and then 30 days, come back here. I'll give you the discount and give you the money again." What do you think he did? So, but of course, he was a doctor, so he was a high-valued client. They wanted to keep him. My argument is, I suspect, with all of this stuff, they want to keep you in their ecosystem. I mean, maybe now's the time to get on the phone to the bank and try and get your rate down a bit lower. Get it down a bit lower. Bloody hell. I mean, look at these rates, guys. And what's going to happen if they just keep juicing it? We start getting more and more inflation to the point where it just goes dangerously high. The issue in Australia is if we get inflation or even stagflation, the social unrest that may cause. So CBA's lowest variable rate is now at 2.69%. ING's lowest variable rate is at 2.49%. Rate City Research Director Sally Tyndale said Friday's cuts would force the rest of the banking industry to begin slashing rates before the Reserve Bank likely cuts the official cash rate in either October or November. Home loan rates might be at record lows, but it's unlikely to have hit the bottom yet, she said. Those cuts from CBA, Westpac and ING will force other lenders to cut their rates in an effort to outbid Australia's largest bank. So let's have a look here. ASX interest rate predictions, the interest rate indicator, and we'll see right now. Whoa, look at this. So I'll read through this again. The RBA rate indicator shows market expectations of a change in the official cash rate set by the Reserve Bank of Australia. The indicator calculates a percentage probability of an RBA interest rate change based on the market-determined prices of the ASX 30-day interbank cash rate futures. And if we can see here today on the 25th of September, to no change, only 28%, but it decreased to 0%, 72%. 72%. That's gone down from 77 yesterday and the day before, but, I mean, can you bet on this on Sportsbet, guys? Can you? This is the thing. Should you lock in, if you can get a really cheap fixed rate, should you do it? Or what happens if we hit to zero? If we hit to zero when they keep saying, oh, it's not going to happen, or, it's unlikely. Are we going to see negative? Will we see negative interest rates in the first quarter of next year? I mean, it's crazy, guys. They've got to keep the housing bubble going. What would happen? I know there are a lot of people that want to see it, trimmed to a more fair and equitable level. But the danger is, are they just going to inflate the price of these things even more? These houses, these properties, is the bubble going to keep going? Where's the work going to come from? How's your work pipeline, guys? I was talking to a client today. That job's starting to come to an end. And I've had a few others that were meant to be already up and running now, but have been delayed. I was talking to a town planner today, and he said, yeah, it seems to be a common story with projects that have been pushed back or delayed. Maybe that's just Queensland because we have the election coming up. I need to start doing some content about that. We'll have to look at the different parties and options we all have here in Queensland. Home loans. So home loan rates might be at record lows, but it's unlikely to have hit bottom yet, she said. These cuts from CBA, Westpac, ING will force other lenders to cut rates. Okay, I've already read that. Westpac chief economist Bill Evans is expecting the central bank to cut the cash rate to 0.1% on the same day the Morrison government is expected to hand down the federal budget. Well, we'll have to go through that budget, maybe do a live stream on it, guys. However, the RBA may wait till November to move on interest rates to better understand what fiscal policy measures will be implemented following the October 6 budget date. I mean, what can the government implement? Do you think we'll see, and I'm only half joking here, this is the sad part, do you think we'll see Mortgage Keeper, where you can get $500 a week towards your mortgage payment from the government? Do you think that could happen? Let me know in the comments, because I don't know if I'm joking or not, to be quite honest. I don't know anymore. A low interest rate environment is causing a large volume of existing mortgage customers to take advantage of refinancing their loans while rates remain at historically low levels. Major lenders are looking to capitalize on the flurry of switching activity, with banks also offering cashback offers to entice borrowers looking to refinance. Ms. Tyndale said Westpac's strategy to offer a lower 2-year variable rate in combination with a $3,000 cashback deal for refinancing was one of the most lucrative deals offered by a major bank. Westpac has changed track to get new customers in the door, switching their basic variable rate to an introductory rate of just 2.19% for the first 2 years, she said. The introductory rate from Westpac, coupled with the $3,000 cash up front from refinances, is an incredibly competitive offer from a Big Four bank. Well, there you go. You take the $3,000, you put it in silver. That's not financial advice. The lowest variable rate being advertised within the home loan market is 1.89% from reduced home loans. It can be acquired if a borrower has a loan-to-value ratio of 60%, which means a mortgage holder must already hold 40% of the required capital for the loan. So there we have it, everyone. There we have it. Interest rates on your mortgages are just going down more and more. What do you think? The banks competing? Or more juice for that property fire? Because they want it. It's in their interest. Remember, if they take a loss for a little bit on a loan here or there, or $3,000 here or there, what's more important? That they keep the property market going? That they help underpin it? Because they don't want to see any decline in property. It's theirs. It's their assets. It affects their viability as a bank. What do you think? As always, thanks for watching. Let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're interested, I also have HeiseSaysUS. You can check that out. Find the links down below for American content. If you want to support the content I created, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great evening. I'll see you later.